Hi there, my name's Ben Everingham and I'm the director here at Pumped On Property, and in today's video I'm going to talk about a guide for buying a property in Brisbane. So we're going to talk about why Brisbane, we're going to talk about the history, the population growth, the job growth, the income growth, the fact that it's been flat for the last 10 years. We're going to talk about the specific areas of Brisbane, north, south, east and west. We're going to talk about buying houses versus units up here, brand new versus existing property, targeting cash flow versus capital growth and where you can find that, what distance from the city you should be buying in and what areas, as well as a long-term investment strategy. So if it's your first time to my YouTube channel, welcome. My name's Ben Everingham. I run a buyer's agency called Pumped On Property, and we've bought over $150 million worth of property in Brisbane in the last 3 years. So these are just my ideas. Take them with a grain of salt. This is obviously not investment advice. So the first thing is why I actually consider Brisbane versus Melbourne versus Sydney, etc. So what I did is I looked at the history of Brisbane, Sydney and Melbourne over the last 10 years, the last 20 years and the last 46 years, year by year. And I used data from CoreLogic, from Homely, from the Australian Bureau of Statistics. And what we found is that in the last 10 years, the average annual growth rate in Brisbane has been very low. But when we looked back over the last 20 years, the average annual growth rate in Brisbane has been over 8.7% a year, which is the same growth rate per annum as Melbourne over the same time, and slightly less than 8.8%, which has been Sydney's growth rate in the last 20 years per annum. Now, if we go back a bit further, and we look at year on year in Sydney, Melbourne and Brisbane for the last 46 years, we see that Sydney has grown on average by over 9.6% a year, as has Melbourne, where Brisbane has actually outperformed both of them at 9.7% per year. So the reason I went and did that data is, obviously as investors we've got short-term memories and all Australians love a winner. But what I did was, I realised that Sydney was getting very close to the top in 2007 of this current cycle. I looked at Melbourne and I feel like it's going to be very close to the top by 2018, 2019. And I really started to look into the Brisbane market, and I wanted to understand the history so that I could eliminate those judgments that I had about the marketplace and actually look at objectively as an investor. So historically it looks great. It's performed abysmally over the last 10 years, but for anyone who's looked at that data, they know that between 2012 and 18, Sydney went gangbusters, but the 9 years before that were very slow, with an average growth rate per annum of under 2%. So even Sydney, which I consider the best market in Australia long term, has had periods of great growth, long periods of flat, and periods where you lose value too. Now, if I look at the population growth, and this is based on the Australian Bureau of Statistics forecast as well as Michael Matusik's, and they're basically saying that 75%, or predicting that 75% of Australia's population growth over the next 10 and 20 years are going to come in three areas, one being Sydney, one being Melbourne, with about 25% each, and the third surprisingly being southeast Queensland and Brisbane, which will capture another 25%. 25% of, or 75% of Australia's jobs are also going to be created in those same three markets, which is really interesting to me. So if we look at population growth at the moment, as of 2017-18, more Australians are now moving into Brisbane than any other place in Australia, including Sydney and Melbourne right now. But these things constantly change. Before 2017-18, a lot of that growth was flowing into Melbourne, and before that, Sydney. So these things constantly change. Maybe when you're watching this video in 5 years, it'd be completely different numbers. But at the time of 2018, that's how it is. Now, jobs in 2017 in Queensland, there were more jobs created in Queensland than New South Wales and Victoria, which is positive. But what's interesting is the average incomes of jobs in Brisbane have been rising fairly dramatically as the mining industry is starting to come back on, and there's some big projects coming on from an infrastructure perspective. So the average income as of 2018 per household is now higher than the average income in Melbourne. In Brisbane. So that's a really interesting piece of information that I heard recently from CoreLogic. Didn't expect it at all. And then the fact that it's been a flat market in terms of why Brisbane, according to Heron Todd White, who produce a really good free report and property clock each month, just Google HTW month in review report. Brisbane is in that nice stage, which is the start of the recovery phase, or bouncing between start of recovery or rising market phase. And that can be a nice place to buy because timing in investing is everything. Think about if you bought a property in Sydney or Melbourne 6 years ago, how well you've done from that. Or think about those of you that have been investing for a lot longer than that, those good times in the early 2000s or the late periods of different decades as well. So property prices at sometimes go up, sometimes they go flat, sometimes they decline. But I like the fact that Brisbane's been flat for 10 years because it represents value to me, because it's still actually affordable for the average person earning the average income to buy a property. Now, the second thing I wanted to talk about in this video is the areas of Brisbane. So Brisbane is a CBD like Sydney and Melbourne, but within those areas, there are lots of different sub-market and sub-sectors and sub-suburbs. So what we're talking about in Brisbane, really, I'm going to talk about North Brisbane, which I really like at the moment. I love those suburbs in North Brisbane between sort of 5 and 10, 20 kilometres from the CBD. I also love some of those beachside suburbs on the north side of Brisbane too. The reason I like North Brisbane is there's good average incomes, very low vacancy rates if you're buying close to the city, good infrastructure, good transport options, and some really nice projects coming on, like train stations, like universities, like hospitals, etc. So, you know, North Brisbane looks really interesting if you're buying closer to the city. Obviously, the further you go out, there's a lot more vacant land and you've got to be careful out there. The other area of Brisbane that I really like is the eastern side of Brisbane. The reason being the eastern side of Brisbane is obviously where the beaches are. And so I'm talking about the suburbs that are closest to the beaches, effectively from Wynnum down through to Wellington Point. I think, you know, the numbers look nice on paper, but when I look at the predictions by people like CoreLogic and RP Data, the predicted long-term growth in those areas looks really, really nice as well. Vacancy rates are tight, lots of local demand as well as some interstate demand starting to come into there at this time as well. We don't do a huge amount in South or West Brisbane just because the average incomes are a bit low for me. There's too many investors buying there for me, and there's a very, very high percentages of renters down there as opposed to owner-occupiers. So the reason I don't like to target those areas, I've got nothing against them. I know people are making money down there on them. I know there's some great suburbs down there, some very, very nice, very expensive suburbs down there, and some really nice things being done. Lots of infrastructure, some population growth, but it's just not my cup of tea personally. I like to more target those quality owner-occupied areas near the train stations, closer to the city and closer to the beach. So the third thing I wanted to talk about in relation to a guide to buying a property in Brisbane is really this concept of houses versus units. So for anybody that has studied the history of Sydney, Melbourne or Brisbane and houses versus units, we know that houses outperform units by at least 1% per annum more, sometimes even more than 2% per annum over a 10-20 year period. So if you've only got a limited number of funds like I do and like most people do, then you've got to be making sure you get the biggest and best return on investment while taking on the lowest possible risk. So reducing your risk means getting better gains, and getting better gains in Brisbane really means targeting houses. Now, almost everyone in Australia knows that particularly in the city of Brisbane and within 10 k's of the city, there is a bit of an oversupply of units as of 2018. Over time, as the population increases, that stock will be dried up. There's something like 80 projects that were meant to happen that have, you know, stopped at the moment just because of this supply issue. But longer term, the CBD of Brisbane is going to be a lot like Sydney and Melbourne, where it's very, very high density commercial, very, very high density inner city residential. And you've just got to be careful with buying that particular type of product. I would not recommend anyone touch it at the moment, especially the brand new off the plan stuff, but that doesn't mean in 10 or 15 years that type of product doesn't represent value again. So this concept, moving from houses versus units, again, you know, from a house perspective, it could be an existing house or a piece of land that you build a home on. The biggest piece of land is always the most important thing because that is what increases in value in Brisbane, Sydney and Melbourne and has done for the last 150 years in Australia. You know, obviously a nice home, good layout, good bedroom sizes, good living area, good kitchen, nice big backyard, good orientation, hopefully north or east facing if possible. You know, just all those things in a quiet street, in a quiet suburb, has a lot of owner occupied potential is kind of what you're looking for when you're targeting existing houses. Now, that kind of segues into the fourth thing I wanted to talk about, which is brand new versus existing. I personally see value in both in Brisbane right now, but when we're talking brand new, we're normally talking about slightly smaller land sizes. I don't like to buy in the greenfield estates where everyone else is doing the same thing and there's lots of investors. I like to buy the infill pieces of land in Brisbane, you know, within that sort of 7 to 20 k's radius of the city, or in those beachside suburbs on the eastern and northern sides. I do think there's some value there at the moment where you can buy land at good prices and build single or dual income properties for good prices and get very, very good rental returns. Some of the benefits of brand new are obviously depreciation, lower maintenance properties, higher rental returns, a higher value property. The negatives are generally smaller land sizes, the pain of going through that building process and not having that rent for a period of time. You know, in terms of existing and more established property, you know, there's a renovated option which is ready for you to move into, and there's the unrenovated option in Brisbane at the moment. Again, both can represent really good value, and I kind of talked about existing property there when I was talking houses versus units. So the fifth thing, which I think is really important when considering buying a property in Brisbane, is this concept of capital growth and cash flow. So the simplest way to do this is basically the more expensive the property in Brisbane that you buy, the worse the cash flow position is going to be. So that means if you're buying a house 7 k's from the city for $700,000 right now, the rent return might only be $500 a week or $450 a week if it's unrenovated. If you were to buy like a nice $850,000 home that's brand new or in really nice condition, you might get a better rental return of maybe $750 a week. But in Brisbane, quality matters. So renovated and brand new product rent for a much higher premium than unrenovated product. You've got to remember that when you're buying. The flip side of that is if you were to go a bit further from the city, sort of 19 to 21 k's type thing, you might be able to buy a $400,000 house and get $370 to $410 a week in rent. So generally, like I said, the cheaper the property in Brisbane, the higher the rental return at the moment. But I've seen suburbs in Brisbane increase by 100k in the last 2 years, and as the suburbs increase, the rent has sat relatively flat. So just remember that, as well as the value of your property goes up in the next 15 years. You know, sometimes yields come up, sometimes values come up, and it's kind of a constant game of catching up. But rents are still very affordable in Brisbane. Houses are very affordable based on long-term averages of income in relation to prices. So it's up to you whether you chase cash flow or capital growth, and that really depends on your property investment strategy. So to identify a great strategy, you've got to know where you are right now, where you would like to be longer term, what's holding you back and what your goals are for this next property, and then kind of make sure that this next step aligns to that longer term perspective that you're working towards. Generally in Brisbane, in relation to capital growth versus cash flow, there are other options in Brisbane if you're chasing cash flow to maybe buy a piece of land and build a dual income property, meaning 2 incomes, 1 house, 1 granny flat, or maybe in some, not so much Brisbane City Council because it's illegal there, but Moreton Bay Regional Council, Logan Council at the moment, Ipswich Council, you can actually build houses as of 2000 or buy houses as of 2018, and in some piece of land in the right pockets of the suburb actually build a secondary dwelling, auxiliary unit or granny flat out the back, which turns it into a dual income. And we've helped clients recently get 6 and 7% rental returns from their house and their granny flat. So there's, you know, really good cash flow options in Brisbane still, which I don't think there's too many of those and unfortunately anymore if you're buying in Sydney or Melbourne as of right now. Capital growth wise comes down to targeting houses and being walking distance or close to the water or in close proximity to the city. So that takes me on to my 6th point. Michael Matusik recently compiled some data on Brisbane, Sydney and Melbourne, where he looked at it year by year within 5 k's of the city, 15 k's of the city, and then above outside of 20 k's of the city, and what he found out was that the inner and middle rings, being 5 to 20 k's from the city, performed significantly better in all three areas than being further than 20 k's out. Now, I put a big asterisk on that because some of the beachside suburbs that represent great value in Brisbane are a lot further than 20 k's out. So obviously do your due diligence and take everything I'm saying with a grain of salt. This is not gospel, but these are just some of the things that I've learned from buying $150 million worth of property in Brisbane in the last 3 years. So generally, the closer you are to the city, within that 5 to 20 kilometre radius, is where the long-term capital growth is going to occur. That's where a big percentages of the population's moving into, and still very, very affordable if you're buying the right suburb, and obviously you understand the market properly. So I hope you've enjoyed this guide to buying a property in Brisbane. Obviously the approach, whether you're buying in Brisbane, Sydney, Melbourne, and I keep reiterating those three markets because they're the three markets that have got the best long-term growth in Australia in the last 46 years. This is a long-term strategy. You need to have a clear plan before you even come to the market. There's no point jumping on realestate.com and wasting your time, or flying up and just doing a drive around. It's really a city, not like Sydney or Melbourne, where everything rises at the same time. Even in the last 3 years, where the average growth in Brisbane's been under 10%, there's been suburbs that have grown by 30-40% if you know where to look. So, you know, get your head around the Brisbane marketplace. I like North Brisbane and Eastern Brisbane. I like being close to the city. I like targeting brand new or existing houses. I don't mind renovated or unrenovated stock. I love cash flow and capital growth, and I like to know that the property that I'm buying in Brisbane now is aligning me long term to where I want to be. So for those of you interested in having a chat about Brisbane in a lot more detail, my name's Ben Everingham and I run Pumped On Property. I'd love you to jump over to the website, which is www.pumpedonproperty.com, and click free strategy session. Now, this isn't for people just looking to get information on Brisbane. I've given you lots of it in this video. I've got heaps of other videos on YouTube and our website about Brisbane. This is more for those of you that are really considering buying an investment property in the next 12 months, that really like the idea of Brisbane but might need some help buying Brisbane, or just need to know a little bit more about the marketplace. Now, we don't share suburbs with non-paying clients, so if you're fishing around for suburbs, jump on Residex's or CoreLogic's website and buy the report for Brizzy. But for those of you who would genuinely like to get a really clear plan in place, get educated on Brisbane, and get some support actually going into and buying in the market, we take on 8 new clients per month, and I'd love to learn more about your position and where you're looking to go, and educate you, and see if there's a fit to work together, and if not, you'll have had a great session and hopefully you can go make a much better decision on your own. So thank you for your time and attention. We talked about why Brisbane, we talked about the north, south, east and west areas in Brisbane. We talked about houses versus units, brand new versus existing, cash flow versus capital growth in Brizzy. We talked about distance to the city being really important, and distance to the beach. There's some other things that are important there, like buying suburbs with good schools, close to transport, close to train stations. There's good suburbs in Brisbane and there's not so good suburbs in Brisbane. So it's not like everything you buy here is magically going to work for you at the moment. Obviously, when everything's going up at the same time, good suburbs still go up further than average suburbs. So I look forward to you entering the marketplace, and I hope this video has given you some insight into the market. I'm really excited to continue the conversation with you if you'd like a free strategy session. If not, good luck with everything you're trying to do, and I wish you all the best. Thank you.